I talk a lot about Apple because I'm asked a lot of questions about Apple. They are a cultural phenomenon. And Apple has become the dominant, the iPhone, the dominant cell phone in the United States. To my knowledge, we are the first country in the world where iPhones have more than 50% market share. In the world, just so you know, Android is 70% of the market. Apple is so embedded in people's lives in the United States. And they're doing something that is a real deal for your wallet. I want to explain it to you and what it means about how banking works in the United States. And something that I have told you about going back last year, talked about it earlier this year, is now in place. And it's how medical debts, in many cases, are not going to destroy your credit like they have in the past. I'll fill you in on that later. So now the Apple news. I've always believed that this staid, archaic industry, the banking industry in the United States, was never going to change from within. It would only progress because of threats from without. And that's just how it is in industries. People are so insular. If you think that the automakers would be tripping all over themselves to try to introduce electric vehicles if Tesla didn't exist, well, let me tell you, they'd still be saying, yeah, electric vehicles may be part of the future sometime mid-century or later. You know, it takes that outsider to disrupt. And Fidelity, Charles Schwab, Vanguard have been the largest disruptors of the traditional banking industry in the United States and the investment community as well. But then change comes from so many different places, and Apple is doing its part with now offering a savings account that's FDIC insured, which is something that's obviously very important these days. Savings account that's FDIC insured. And this savings account is tied in, embedded with the Apple credit card that Apple is trying so hard to get people to carry, to have as a digital thing on their iPhones. They will send you a card, but they don't ever want you to use the card. They want you to use Apple Pay and pay with the iPhone. And they've not been able to get the adoption of the card they hoped for. So now they got this attention getter. You can get 4.15%, at least for now, on the Apple savings account tied into the Apple credit card that you then use and add to from your iPhone. All part of strength on strength on strength. A typical bank still paying a fraction of 1% on savings. And so you got another disruptor here, Apple. And this is great news for your wallet. Something else I want you to be aware of is I want to bring up again, because this has come up too much. There are people out there running ads, promoting fantastic rates on savings or their version of CD. They can't call it a CD. And many of these non-traditional financial players, well, they're not FDIC or NCUA insured, and they are selling you the equivalent of promissory notes. And there's one that has come up before in questions from people on our podcast, and that's TELUS. And Barron's did a big story on them recently about how they kind of fudge on how your money is protected. The reality, based on Barron's research, is you do not have FDIC insurance. And the fact they're offering these great rates doesn't mean anything if they can't honor them. And there can be many organizations that mean the best, but even meaning the best isn't enough. And that's why making sure the money that you depend on for a rainy day, for savings, not the money you invest, but the money you're saving, that it needs to be under the umbrella of FDIC insurance or NCUA insurance. NCUA is for credit unions. And Krista, enough about, how many times have I warned about insurance over the last 25 years on?
I mean, I think people are really listening now.
Well, I saw, not to beat a dead horse, but I will. I saw a chart recently how much of various banks' deposits, that where you are in an FDIC insured bank, but what percent of those deposits are uninsured? And it's mostly businesses that have their money in these banks. And it's eye-popping how much of deposits are not FDIC insured. And the people who handle cash management at a business, could be a treasurer, could be a chief financial officer, for a smaller business, could be little old you or me. We're being careless by leaving money in excess of FDIC insurance exposed.